Hey traders, Todd Gordon here with TradingAnalysis.com. This is CNBC's Trading Nation. Traders, we're going to go to work in the foreign currency markets. The reason we're going international is because of what's happening domestically in the U.S. yields. In the bond market, 10-year yields are pushing up above 3%. That's putting a bid into the U.S. dollar and out of the safe haven currency, which is the yen. So it's sort of a global macro kind of relationship we're playing here. So to make it more simple to understand, I'm a picture kind of guy, so let's go up here. This is the FXY, okay, in red and green. This is the Japanese yen ETF. Overlaid on that is the price of the 20-plus U.S. bond. So this is the TLT. It tracks 20-plus yield treasuries. This moves opposite to bond yield. So this purple line goes down. That means those yields are moving up. And what you're going to see here is as the yen and the TLT have been trading in 2016 and 17, they've enjoyed a nice inverse relationship. However, look what happened here, divergence. Okay, now that divergence I think is beginning to close. FXY is dropping, the yen is selling off, the dollar's rallying as bond prices are going down, which means if bond prices are down, if you remember back to your economics class, yields go up, inverse relationship in the yields. So I think that TLT is going to pull the yen lower. As we get off that and focus in on the FXY, you're going to see that we have an uptrend support line that is likely to be tested. Okay, so that's the point at which the decision will be made whether the yen continues to drop. That would mean the TLT continues to drop, which means yields continue to go up. Interest rates in the US continue to go up. So that decision point is going to happen right around the 86 level, 86 to 85. So what I want to do is put an option trade to get down to that decision level. Okay, that's the smart way to trade. You don't want to get down there because you could flip a coin whether that's going to break or hold. You don't know. But I can tell you a decision will be made down there and you want to trade towards decision points. So here's the trade we want to do. In the June monthlies, expire on the 15th, I want to go ahead and buy that 87 strike put. You want to sell the 85 strike altogether. That's going to cost you 45 cents or $45 per option spread. That's it. That's your max loss, which means if you're risking 45 on a $2 spread, you can make the difference, which is $1.55. So that's a pretty solid reward to risk ratio. Now I'm going to position size. I'm going to put the entire premium out there. I'm not going to try to cut it at a 50% loss. I'm just going to let this thing go. So position size according to your risk profile, something that's very important. I stress with my research subscribers. So let's go ahead. Looks like they're quoting me 43 cents, and that trade is now working. So that is the trade in FXY to take advantage of these changing global macro relationships with these higher yields. This has impact around the global economy. So pretty cool stuff. Also, don't forget, on Thursday, we have the CNBC stock draft. I'm going to be competing in one of 8 teams against Mr. Wonderful and Kevin O'Leary and Eric Dickerson from the Rams. It's pretty cool. I'm bringing a special guest, a nice addition to Team Flash Crash Gordon. If you saw last year's event, he's a superpower and he has something to do with Flash Gordon. It'll be exciting. Be sure to follow us at Trading Nation on Twitter for updates to these trades, as well as all the other markets our traders are watching. We'll see you guys in the next video update.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.